To start. So, good morning, all of you. How are you all? So we have started the Indian economy, Indian financial system subject earlier than PPB, and we have almost completed, I can say we have completed the module C there. But now from today onwards, we are starting the PPB subject, that is Principles and Practices of Banking, in which we are going to start with the first unit of your module A, that is a banker-customer relationship. Okay, but before starting with the topic, let's understand the subject, like what is this particular subject and what is this particular subject is asking for. So first of all, if I talk about principles and practices of banking, it totally talks about the banking functions, or not, I can't say the functions, but everything related to the banks. The financial product and services that banks use, the services that bank is providing to its customer, the products the bank is providing to its customer, what are the rules, regulation, what are the norms are there that has been given by Reserve Bank of India, that all things we have to cover under this particular subject. So first of all, as you already know, there are 4 subjects in the JAIIB and each subject have 4 modules. So PPB also have a 4 modules, A, B, C and D, right? So let's start the session by understanding this particular subject. So these are the 4 modules, A, B, C and D. Now in case of PPB, the certain thing you have to know is that first of all, if I'm talking about PPB, it have 4 modules, A, B and C. So principles and practices of banking will cover your 4 modules, module A, module B, C and D. These are the 4 modules. Now, if I talk about these 4 modules, you can combine these modules with each other. So A and B can be combined and C and D can be combined. So you can see here, as I've told you here, 4 subject, 4 modules are there. A and B is a combination. And similarly, C and D has a combination here. Now, in comparison to the Indian economy, Indian financial system, in which we have discussed that the module C and D has more weightage, here the module A and B have more weightage. And these 2 sub-modules have a huge syllabus in comparison to the C and D module also. So right now, first of all, we have 4 modules. The modules we have, that is 4, and the units we have, that is 55. 55 units are there in the principles and practices of banking subject. Out of that, the maximum, only 21 units are in the module A. The around similarly 19 or 18 modules will be in the B. And the remaining will be in the C and D. So the huge syllabus is in the module A and B, then in comparison to C and D. And I can say 60% weightage in the paper have been given to the module A and B, and the 40% weightage have been given to the module C and D. But it doesn't assign. And this weightage I'm talking about on the basis of what? On the basis of the May 2023 paper of yours. Okay, in which module A and B got the more weightage in comparison to C and D. If I talk about module D, it has only 5 units. That's the ethics, and it has only 5 units. So it's very obvious there is the difference in the combination of your modules here. So it doesn't mean like to clear the PPB subject, we need a 50 marks, right? So it doesn't mean that we only are going to study the 2 modules, that is A and B, because it has a 60 marks weightage, and we are going to ignore the module C and D. No, this is on the basis of the key takeaways we have taken from the previous paper, but doesn't mean the same pattern will be followed by IABF in the upcoming October paper also. So we have to cover all the 4 modules, all the units, that is 55 units in the paper. We have to cover each and everything with the conceptual understanding, because the different pattern of questions can be asked here. So this is mainly the 4 modules. Now what these modules are talking about, let's see. So we have a first module here. You can see 21 units are there in the first module. And first module talks about the general banking operations. It talks about what? It talks about the general banking operations like banker-customer relationship, AML, KYC guidelines, operational aspect of your KYC, opening account of various types of customer, operational aspect of deposit accounts, operational aspect of handling, clearing, collection and cash, banker special relationship, foreign exchange remittance facilities for individual, operational aspect of NRI business, NRIs, non-resident Indians, foreign currency accounts for residents and other aspects, cash management services and its importance, the payment and collection of check and other negotiable instruments, responsibilities of paying bank, responsibilities of collecting bank, ancillary services, financial inclusion and financial literacy, customer service guidelines, duties and rights of a banker and a customer rights, grievance redressal and RBI integrated enforcement scheme, the Consumer Protection Act 2019 and the Right to Information Act 2005. So you can see 21 units are there in the module A. And it only talks about the general banking operation, the operation which bank perform for its customer, that we have to cover. Now, apart from that module A, the module B also have a huge syllabus. You can see from from unit 22 to unit 41, we have the units here. Okay, it means around 20 units are there. That talks about the functions of bank, like what functions bank performs. So bank provide lending, bank provide loan. Achha, if I'm talking about the business of a bank, let me know what is the actual business of a bank. Let me know here, what is the business of a bank? Answer quickly. Dipti ma'am is saying providing advances. Okay. What about rest? Lending is the business of bank. That is also correct. What about rest? Deposits and credit. Okay. Accepting deposits and credit. What about rest? See, if I talk about the business of banking, the first thing we have to understand is that the business of banking is first accepting deposit from the public for the purpose of lending or investment. Hana, for the purpose of what? For the purpose of lending or investment. You are accepting a deposit from the customer and that deposit is withdrawable whenever the customer demands. This is the basic business of a bank. Like first, you accept deposit from the customer, from the public, for the purpose of lending or investment. You are not accepting that deposit to use for yourself. No, you are accepting that deposit to give as a loan or to invest in the certain market. And also you are providing the withdrawal services to the customer on the demand by using a certain check, demand draft, whatever you want, right? This is the basic business of a bank. This is the core business of a bank. And when we talk about the core business of a bank, can we say that these are the only three functions that bank perform? No. Bank perform many types, other types of various forms of banking business, or not the banking business, but various forms of businesses are performed by the bank. Now, how you can differentiate that? How you can define that? What is the function of a bank? So first of all, business of a banking is three: accepting deposit for the purpose of lending or investment, provide the withdrawal facility to the customer. Apart from that, whatever services we are getting from the bank, that's a various forms of business that banks provide. And that's where the functions of bank can be seen. And accordingly to the other services or other products that banks providing us, we have defined the banker and customer relationship. Hana, we have defined what? The banker and customer relationship. Like what kind of services you are providing to the customer, accordingly your relationship with the bank will be defined. Similarly, on the basis of the different various, or we can say various forms of businesses, we had defined the types of banking also. Like if I talk about types of banking, we have narrow banking, universal banking, para banking, door-to-door banking, relationship banking, Islamic banking, shadow banking, etc. Virtual banking, etc. So on the basis of the different services or various forms of businesses that bank perform, we have defined the banking, the different types of banking. Similarly, on the basis of providing the different forms of services or various forms of businesses, we have defined the banker-customer relationship, creditor-debtor relationship, debtor-creditor relationship, then agent-principal relationship, beller-belly relationship, lessee-lesser relationship, etc. So on the basis of various form of services that banks provide, we have defined the relationship between a bank and a customer. And this is what the functions of bank talk about. Okay, this is where the functions of bank we are talking about. I hope it's clear. So these all are the functions on the basis of we have to discuss the relationship between banker and customer. So principle of lending, the appraisal and assessment of credit facility, the operational aspect of loan, the types of collateral and the characteristic, different modes of charging securities, the documentation, the NPA and stressed asset, important laws that is related to the recovery like IBC, Sarfasi Act, Lok Adalat, DRT, DRAT, NCLT, NCALT, all will be covered. Now, contract of indemnity bond is there. What is the value of this bond that we have to discuss? Contract of guarantee and bank guarantee, letter of security, deferred payment guarantee, law relating to bill finance, personal finance, priority sector advances, agriculture finance, finance to microfinance institutions, co-lending arrangement with NBFC, micro, small and medium enterprises, government sponsored scheme, and the self-help groups. All these are the functions of a bank. All these are what? Functions of a bank that we have to cover. Now the module C is talking about the banking technology. Now you can see the module C have only 8 units. Module A have 20 units. Module A have 21 units. Module B have 20 units. Module C have only 8 units. And the module D will have only 5 units, you can see. So module C talks about the technology that bank use, like the essential of bank computerization, operational aspect of core banking solution. This core banking solution is very important. 2 or 3 questions definitely will be coming from this core banking solution. Okay, then the alternate delivery channels, digital banking, data communication network, electronic fund transfer system, digital payment system, NPCI, impact of technology, adoption and trend in banking technology, security considerations and mitigation measures in banks. Then we have operational aspect of cyber crimes, fraud risk management in cyber tech. Then we have technology trends in banking, e-rupee, fintech, regtech, subtech, hashtag banking, etc. So all these are the banking technology. All these are what? All these are the banking technology. Clear? So this is the module C. And the module D talks about the ethics in banks and financial institutions. You can see only 5 units are there. So first we have to discuss what is ethics, what is business ethics, and the banking and integrated perspective of the same. Then we have to cover ethics at the individual level, ethical dimensions, employee, work ethics and workplace. Then the banking ethics challenging dynamics. All these are the chapters that we have to cover in the module D. So you can see module C and D. Module C and D both covers the 13 units only that you can easily complete in 15 to 20 days. But module A and B covers around 41 units. So that definitely going to take 1 month period. So start with the module A and B because it has more weightage also. It has more syllabus also. So we are going to start with the module A and B, and in the last 20 days, it is very easy to clear the both modules, that is C and D. And this is how we are going to cover our syllabus. Okay, we are starting with the module A. Now the certain key takeaways that we have seen here in the PPB subject, first of all, most of the question was asked from the module A and B. Okay, because it has a maximum syllabus, it has a more banking products in it. Then the weightage was around 55 to 60 marks in the module A and B. Then statement-based questions were there. All questions were based on the concepts, and the marks distribution was there, in which 2.5 mark, 1 mark and 2 mark questions can be seen. Okay, now what different pattern of question can be asked? Like one pattern we have said is statement based question will be there. What are the other patterns? So the pattern of question that can be asked in the paper, we have different patterns. The first of all, we have one-liner questions. We have what? We have one-liner questions. One-liner questions simply means they will give you a certain question. Let's say they have asked, what does CBS stand for? And in the option, they have given you the full form of CBS, core banking solution, central banking solution, cross banking solution, etc. So you have to answer accordingly. Then the second question based will be on the statement based question. Now, statement-based questions are lengthy. There are 2 things that have to be very clear from our side about the statement-based question. That is, first, these questions will be time consuming because the statement will be lengthy. So you have to read each and every statement. That's a lengthy question. And the second thing that is very important here, or the second thing you will find here, is that in the statement based question, you have to understand the detail of the concept. Let's say, for example, they have asked about any particular, let's say they have asked about the SLR. Is statutory liquidity ratio. So they are asking which of the following statement is correct about SLR. The first statement is SLR stands for statutory liquidity ratio. Second statement is SLR is defined under Banking Regulation Act 1949. Third statement is saying SLR will be maintained with the banks by themselves in form of cash, gold and security. Fourth statement is saying SLR has a maximum limit of 40%. Fifth statement is saying SLR have a minimum of 15% limit. And these are the 5 statements they have given you, and they are asking which of the following statement is correct. And the option is given only 1, only 2, only 3, all except the fourth statement or the fifth statement, let's say. So which of the following will be correct? D option will be correct, because the last statement I have told you that the SLR have a minimum limit of 15%. That is wrong. SLR do not have minimum limit. It has a maximum limit of what percent? Of 40%, but do not have minimum limit. So if you are attempting the statement based question, you have to know each and every detail about the topic. Until and unless, you won't be able to answer the question. Okay, so this is what I'm talking about. Two things we have to be very careful about statement based question. They will be time consuming, plus with the time consuming portion, they will be needing the detailed concepts or the detailed knowledge of a topic. Okay, now the third pattern of question is match the following. The third pattern of question is match the following. Clear? In which again you have to know about all the topics that have been given in the match the following. Now fourth one is case study question. Now case study question needs a proper understanding of theory plus the decision making of yours. Right? If I'm talking about case study question, what is required in the case study question? It is required like you know the theory, you know the concept, you know the rules, regulations of a particular topic. But with that, you have to be very careful about your decision making process. Hana? Accordingly, you will be able to answer the case study. So these four types of questions can be seen in your paper, in the PPB. Now, so this is how we have to cover here. Now let's start with the first chapter, that is a banker-customer relationship. So what we are going to discuss today, we are going to discuss the first chapter of yours, that is in the module A, and that chapter is your banker-customer relationship. So banker-customer relationship is simply defined on the basis of the services we are taking from the bank. Hana, if I'm depositing my money in a bank, I will have a different relation with the bank. If I'm taking a loan from the bank, the different relation will be there. If I am ordering a bank to pay a certain amount of money, I have given a check to the bank and I'm ordering a bank to clear the check. That's a different level of, or that's a different types of relationship I'm having with the bank. So on the basis of what services we are taking with the bank or taking from the bank, that define the relationship between the banker and a customer. Okay, and that's what you are going to discuss today. So let's start with the introduction of the chapter. 1 second. Just give me a minute. Just a minute. Okay. So now introduction, we are talking about the basic function of a banker. Another basic function of a banker is accepting money from the public. You are accepting money from the public by way of deposit and deploying the same by means of loans and investment. So do make sure if you are accepting money from the public, you are accepting for the purpose of what? Investment or lending. Otherwise, you are not allowed to accept the money. Hana, like if you okay, so if I'm talking about here the introduction of the chapter, it says that whenever you talk about the relationship between a banker and customer, this relationship will be seen in a certain level that you provide services to the customer. On the basis of what? That will be relationship decided. Now, one thing is very important. If you want to use a word or term bank or banker or a banking company, If you want to use these words, if you want to use this terminology, there is a condition. Then only you will be allowed to use this word. And the condition is that you have to accept money from the public for the purpose of lending or investment. If you are accepting deposit from the public, but you are not doing lending and investment, then you cannot use these words. If you are not accepting money from the public, then you cannot use these words. So the first condition is that you have to accept money from the public for the purpose of lending or investment. Then only you can use these words. Otherwise, no. And that's what we are talking about, basic function of a banker. So besides, bankers render a variety of services, like they provide locker facility, they provide keeping article in the safe custody, they provide collection of bills, they provide check, they provide demand draft, they provide international debit credit card, they provide the demat account facility, they provide insurance facility, they provide pension facility, etc. So on the basis of the various types of services that bank is providing, we have a different relationship with the bank. Okay, and the basic banking function, I have told you so many times that the basic function of a bank is simply accepting deposit on the purpose of withdrawal, on the purpose of lending or investment, and then the withdrawable funds function will be also available. Sachin sir and Bala sir, your Indian economy, Indian financial system class will start today in the evening at 7 p.m. Okay, don't worry about it. But rest I will explain you in the class. So right now, focus on the subject, that is PPB. About the Indian economy, Indian financial system, your first class will be there in the evening at 7 p.m. Hana, rest, do not take any tension. I will let you know about the thing you are facing problem with in the class. Okay, so right now, focus on the content only. Now we are studying PPB. Why you are talking about Indian economy? So I know you guys are very confused about it, but don't worry. The first class will be in the evening at 7 p.m. Don't worry about it. Sure, let's continue. So this is what we're talking about now. The different types of relationship are created between the banker and the customer, it depending upon the nature of services rendered. So what we're talking about here, the different types of relationship, it will be created between the banker and customer, and that will depend what kind of nature of service you are providing to the customer. On that, your relationship will be defined. Now, requirements to be called a bank. If you want to use a word that is bank or banker or banking company, what requirements are there? What you have to fulfill there? So first of all, as per section 5B of Banking Regulation Act. So do remember, the banking term or the banking functions is defined under this section. There are certain important sections that you have to remember. 1 second. That you have to remember, that is like section 5B that defines the banking definition here. So this says that the banking means accepting of deposit for the purpose of lending or investment. You are accepting deposit for the purpose of lending or investment, deposit of money from the public that is repayable on demand or otherwise and withdrawable by the check, draft order, otherwise. This is the definition of banking is given. Like let's say, for example, before banking, if we talk about the term bank and banking, there are two terms. We have two terms, that is, one is bank and the another one is banking. The first term we have bank and the another term we have banking. So bank means what? Bank means a financial institution. What is a bank? Bank is a financial institution. Okay, what is a bank? Bank is a financial institution. Or you can call it a bank is a legal organization. So bank is a financial institution or a legal organization. Why financial institution? Because it performs the services related to the money. Why legal organization? Because it follows a certain rules, regulation of a certain act. That's why this is a bank. So bank is a financial institution or a legal organization. What is banking? These services provided by bank. All the services that is provided by bank is known as your banking. It is known as what? It is known as your banking. That's what the bank and banking is. Clear? Now, when we talk about bank, it's simply an institution which accepts money, provide loan and perform the money transaction. But banking is what? The different level of services you are providing. But the banking is also specifically defined. Like the banking is defined as, first, you have to accept money from the public. Accept deposit from public. Second, this accept of money should be done for the purpose of investment or lending. For the purpose of investment and lending, you can accept that money. And the third, this money should be what? This money should be repayable on demand of a customer. And this is what the section 5B of Banking Regulation Act talks about. And this is what it is defined here in very detail, that this is the business of a bank. This is what the bank does, or this is what the bank have to do. Hana, bank have to accept the deposit from the public for the purpose of investment or lending, and that will be repayable on the demand. This is the conditions we are talking about here, right? And that is defined under the section 5B here. But it's not the only three things that bank's performing. This is not the only three services that bank is performing. So has the banker in the business of accepting deposit from the public and utilizing these for the purpose of lending or investment, that person is a banker, right? So these third essentials to satisfy the requirement of the definition are, first, first, deposit should be only for lending and investment. Companies accepting deposit for trading or manufacturing are not considered as a bank. So obviously, if you are accepting a deposit, the same thing is written here. If you are accepting a deposit, then that deposit should be for the purpose of investment or lending. Let's say Adda 24/7 is also accepting money from the public, in the form of investment. If I am purchasing the share of Adda 24/7, I am giving money to the Adda 24/7, and Adda 24/7 accepting that money. But it doesn't mean you can call Adda 24/7 a bank or a banking company. You can't call that. You can't use that term. Reason why you can't use that term? Because it's very obvious that this company, this Adda 24/7, is accepting money to expand their business, to invest in their own business, to use that money for their own company, right? That's the investment that they are taking. That's the money that they are taking from the public. But if you want to use the term bank or banker or banking company, you have to accept deposit for the purpose of lending or the investment. This is what the first point is saying. The second point is saying here that the deposit should be from the public. So Nidhi multi-benefit societies, cooperative society that accept deposit from their members are not covered as a bank. So what are Nidhi companies? Nidhi companies are those companies which accept money from their public and they work only for their member. Not the public but the member. It means Nidhi companies are those companies which collects funds from their member and they give funds to their member only. That's a Nidhi company. So it's not like you can accept deposit from your own company and then you can lend or invest that money. No. The second condition is that you have to accept money from the public. If you are not accepting the money from the public, then you can't use the term bank, or they will not be covered in a bank. The third is saying acceptance of deposit should be in the form of money. Whatever you are accepting money, whatever you are accepting from the public, that should be done in the form of what? In the form of money. Okay, that's the third condition. So this combines the definition of your banking under the section 5B of Banking Regulation Act. Now next. A company incorporated under the Companies Act 1956 or the Companies Act 2013 can be a bank, can be a banker, or can be a banking company. Under what? Under section 5C. So under section 5C of Banking Regulation Act, it says that the banking company means any company that transacts the business of banking in India. So do remember section 5C of Banking Regulation Act says that any company can become a banking company if they are performing the business of banking. Now again, we came to the same point here. It is written like in this way, but we came at the same point. What is the business of banking? What is the business of banking? Accepting deposit for the purpose of investment or lending, or that deposit should be repayable. So any company who wants to become a banking company, they have to accept deposit from public for the purpose of lending and investment, and that should be repayable. And then only that company will be known as banking company. Right? This is what the Section 5Cs talk about. Section 7(1) of Banking Regulation Act prohibits the use of the word banker or banking company by a company other than a banking company. Okay, that's the Section 7(1) is talking about. Now, Section 7(2) is talking about further prohibits the use of such words by an individual or a group of individual or a firm. So these words cannot be used by any individual, any company, any firm until and unless they are doing a business of banking. And what is the business of banking? I have told you so many times. Okay. So you can see here there are certain sections we have talked about. Section 5B, Section 5C, Section 7(1), Section 7(2). Section 7(1) say no corporate can use the term banker, banking company. Section 7(2) say no individual can use the term banker, banking company. Section 5B says that the bank is a company or banker will be the person who accept deposit from the public for the purpose of lending and investment, also gives you the repayable services of the funds. Now, 5C talks about any company can become a banking company. Any company can use the term banking company if they are performing a business of banking. These are the 4 sections that we have covered. Now, if we talk about money lenders are not bankers. It's very true. Money lenders are not banker. Reason? Acha. If we talk about financial system, Hana, what is financial system? Can you let me know? What is financial system? Let me know what is financial system. Then we will continue further. What is financial system? Answer quickly. If you do not know, just write don't know. But respond. What is financial system? Managing funds. Okay, Rekha ma'am. Dealing with money. Okay. What about rest? Financial activities in the country for a specific time, except deposit and lending. Okay, see. If I'm talking about financial system is a system in which we are doing exchange of funds. The system where exchange of funds will be done among the person who have surplus money and the person who have deficit of money. So the exchange of funds among the person who have surplus of money and the persons who have deficit money, this system is known as financial system. Hana, this system is known as what? This system is known as financial system. The persons who have surplus money and the persons who have deficit of money, among them you are exchanging the funds. This is a financial system. Clear? Now, this financial system is, who will be the person who have surplus money and who will be the person who have a deficit of money? For that, I will give you 2 names or 2 parties, and you have to tell me which party belongs to which particular category. First is, let's say I am, that is Amanjot, and the second one is, let's say, Adda 24/7. There are 2 parties. One is Adda 24/7 and the one is me. That is my name, Amanjot. Now let me know, out of these 2 parties, which party belongs to the surplus of money sector, which party belongs to the deficit of money sector. Let me know. Okay. So everyone is going with the Adda 24/7. Only one person said that I am the person who have surplus money. So thank you for that. That so at least one person thought about it, that I can be the person who have a surplus money, and that's true. I am the party who has a surplus money, and Adda 24/7 is a party who have a deficit of money. Now, why so? Let's understand. Adda 24/7 is a company, obviously, and this company have its own business at a various level. They provide the employment to a lot of people, and they are providing salaries and etc. Everything. But this is a company, and if this company want to expand the business, this company needs money. It's not like Adda 24/7 have money and it has a lot of surplus money, and whenever they want they can take withdrawal that money from the account and they can invest in their business. They do not, they are not allowed to do that, and they do not have that much amount of money. So if they want to expand their business, let's say we have a 50 studios in this head office. If we want to expand more 50 studios in the head office, we need a money. And from where we can get that money? It's not like the owners are using their own savings in the business. Obviously not. They will raise capital from the market. They will issue shares, they will issue bonds, they will issue debentures, and then they can take loan from the bank. So they raise money from the bank, from the market. So that's why the company is a party which have a deficit of money. And what about me? I am earning a certain salary, let's say for example, and I have deposited 1 lakh rupees in my savings account, and I have had a FD of 5 lakh rupees in a particular bank. Now this 1 lakh and 5 lakh which I have deposited in the bank, it means that's a surplus money with me now, and I am investing that money. That's a surplus money with me. So I am the party who have a surplus money. Persons like me will give money to the other 24/7. Okay, because we have deposited our money in a bank. So the company can take loan from the bank, and bank will be providing the company the money of ours. Apart from that, if company issues the share, let's say Adda 24/7 is a registered company and company is issuing IPO or FPO, whatever, I am purchasing the share of a company. So I am the party who is giving to the Adda 24/7 money. So I will be the party who have a surplus money, and company will be the party who have deficit of money. Let me know, is it clear? Let me know, is it clear? So the persons who are giving money to a certain other person, they are the surplus money sector. Clear to all? Answer quickly. Okay, very good. So this is the financial system. Now the financial system is of two types. One, we have formal financial system, and second, we have informal financial system. Formal and informal, two types of financial system we have: formal, informal financial system. Now the formal financial system means what? The system which have a rule book, the system which have a rules, regulations, or a code of conduct, everything. Let's say when you are going to a bank, Hana, you all are the employee of a bank. Let's say I am the employee for Adda 24/7 and you guys are the employee of a bank. Now, whenever we go to the bank, whenever we join the bank, or whenever I join my company, we have got a certain KRA, key responsibility areas, in which everything is defined, that this is your work, and it is also defined the code of conduct, like how you have to behave in an office, how you have to act in an office, what are your responsibility in the office. And that's a rule book I got when I joined the company, and I have to follow that rule book. That's the formal form of the company. Okay, I have a certain rules that you have to wear a 24 t-shirt, you have to come office before 10 minutes of your class timing, you have to leave the studio before 10 minutes your end of the class timing, whatever. Also, you have to sit in the area which is dedicated to the academicians, like the teachers. You cannot go to the HR department, you cannot go to the marketing department, etc. All these rules have been given to me when I joined the company. That's what? That's the formal system. That's the formal form of this organization. Okay, that you have to go as per the rules. But there is also informal form in the organization. That we as an individual creates. So we as an individual have a need of relatedness, have a need of belongingness. Like if I am working in an organization, if I am working in a company, I have a need, like I will have a friend at the office environment, at the workplace, with whom I can have my lunch, I can go to the tea breaks, I can go to watch movies or whatever I want to do. So every individual make their interrelationship with the other employees of the company. That company do not allow you to do that, but you create certain kind of relationship. You are going for a gossip, or you are going for a tea break in a day for 4 to 5 times. That's the informal form of your organization. And without these two forms, no company, no organization, no bank, nothing can work. In every company, you will find the formal form. In every company, you will find the informal form. Okay. Similarly, every system will have formal, informal rules. So the formal financial system, which have rules, regulation, which have a rule book, which have a regulator, which have a restrictions that this can be done, this cannot be done, and that have defined this is the hierarchy you have to follow. Informal system do not have any hierarchy. They do not have regulatory bodies. They do not have any rules and regulation. Whatever they want, they can do that. Now, how we are going to relate that with the banking system or something else? So if I'm going to a bank to open a bank account, to take a loan, there is a criteria. The bank will check my credit history. Bank will ask a collateral from me. Bank will ask for the third party guarantee, and everything will be checked. Then bank will give me the loan, and the rate of interest will be defined, that this rate of interest will be charged in the home loan, in personal loan, and etc. etc. That's the formal system. What is informal system? I am taking money from my parents. I am taking money from my relatives. I am taking money from my friends. So they do not have such kind of restriction. They are not going to check my credit history. They are not going to check the collateral I am giving to them, the third party guarantee. They do not need that. That's the informal system. So the formal system, which have proper rules, regulation, regulatory bodies, but the informal, they do not have rules, regulation, regulatory bodies. So you can see these money lenders, they are the part of the system. Let me know. The money lenders are the part of the system, formal financial system or informal financial system. The money lenders are the part of which system, formal or informal? Very good. They are the part of informal financial system. So the money lenders are not bankers. So you can see the definition of banker does not include the money lenders or mahajans also, or sahukars also, or shetis also. So because they run their business as individual or group of individual and not as a company, which is registered under the provisions of Companies Act or Banking Regulation Act. So they works as an individual, they works as a group of individual, but they not registered under the act. So in the case of Gurjeshran Chatterjee versus Ravaranthan Chatterjee, it was held that while a money lender lends his own money, a banker lends money of his customer or depositors. So money lenders do not accept money from the public and then they provide that loan or investment of that product. No, they use their own money to give loan to the other persons. But the bank use the money of the customers of its bank. Okay, or you can call it depositors. Now the second, accepting deposit of money from the public. Now every institution carrying out the business of banking must accept the deposit of money from the public and should not confine to the deposits from its members only. So accepting deposit criteria is there, that if you want to be called as a bank or banking company or a banker, you have to accept deposit from the customer. Okay, a customer means public. It's not like you are accepting money from your own member. Like 24/7 is taking, let's say, capital from its own employee. Then this company cannot be known as a banker. But if the company taking money from the public and then gives the lending and investment purposes, then it will be known as the banking company. Now, so in the case that is entitled, the example they have given, the case study they have given to explain you the certain criteria of the banking. So in the case entitled Mahalakshmi Bank Limited versus the Registrar of Companies, it was decided that if a company gave loan to the public but did not accept deposit from the public, it could not be considered as a banking company under the Section 5B of Banking Regulation Act 1949. So acceptance for the purpose of lending or investment, an institution accepting the deposit money without any purpose or with a purpose other than the lending or investment cannot be termed as a bank. If I have accepted money from the public and I'm using that money for my own business, to expand my own business, to start my own business, then I cannot be using the term bank. Okay, I will only be allowed to use the term bank when I am accepting the money from the public. For what purpose? For lending or investment purpose. Now, deposit repayable to depositors on demand or otherwise. So, deposits of money may be repayable either on demand or if they are term deposit on the expiry of the stipulated term of period. So, the deposit accounts, we have 4 types of deposit accounts that we have. Demand deposits, and you can call it term or time deposit. Demand deposit, and the second one is term or time deposit. Clear? Now, let's understand this. Demand deposits are the account which are working on the demand of a customer. It means whenever a customer wants, he or she can deposit the money. Whenever they want, they can withdraw the money. That's a demand deposit. That is CASA, current account and savings account. Term or time deposit is a type of deposit that covers the RAFA account, recurring account, and a fixed account. Hana, it covers what? The recurring account and a fixed account. Because they have been deposited with the bank for a particular period of time. In the current account, savings account, whenever I can deposit my money. Whenever I want, I can withdraw my money. But in RD and FD, there is a minimum time period. For RD, it is 6 months to 10 years. For FD, it is 7 days to 10 years. This is the duration they have defined. So you will be able to withdraw your money on the maturity period. Let's say you have deposited money for 5 years. So after 5 years, you can withdraw the money. Okay. So this is what the option is talking about. The statement was talking about of the condition of repayable of deposits. So the deposits may be withdrawable by customer by check, draft, or order or otherwise situation. So the proper documents or the proper way of withdrawing the money should be used. Okay, Acha, if I ask you a question, let's say I have had a FD. Hana, when I will be able to withdraw my money? The first condition, option A, is saying on customer's demand. Like whenever the customer demand to withdraw the money, it can be withdrawn. B option is saying on bank's demand. Whenever bank want, it can give you the money back. Or bank's wish, we can say. Third, on maturity. On the maturity of the document. And D, none of the above. What will be the right answer? When the money which is deposited in FD can be withdrawn. The money which is deposited in FD can be withdrawn when? On customer's demand, on bank's demand, on maturity, or none of the above. Here you are bankers, you have to give the right answer. A and C and D, 3 options are coming and 2 persons only said D. And the right answer is D. Answer will be either A or C. In FD, you have 2 conditions. Na? Let's say, for example, I will be able to withdraw my money. I have had the FD for 5 years. So after 5 years, I am able to withdraw my money. But I have second condition also. What is the second condition? If I need money after 2 years, I can withdraw that. Na? It is allowed. So right answer will be D. The right answer will be either A or C. Both the conditions are allowed. You can withdraw on the demand or you can also withdraw on the maturity. Okay. Now the banks, so do make sure, do remember this when it will be withdrawal. Now, banks are also authorized to carry out the certain other transaction as provided in the section 6 of Banking Regulation Act 1949. So we have discussed till now that bank performs what? Bank performs the business of banking. Banks performs the business of banking. right? And business of banking is accepting deposit for the purpose of withdrawal and investment, sorry, for the purpose of lending or investment, and repayable on the demand of the customer. But now, apart from this, also a various type of services are provided by the bank, and those various type of services is defined under the section 6 of Banking Regulation Act 1949. Okay, so first is, what can bank do? Bank can do the discounting of bills, bank can perform collection of check and bills, bank can perform remittance services, bank can provide safe custody of articles, bank can provide the hiring of safe deposit lockers, bank can provide conducting foreign exchange transaction, bank can conducting the government transaction, central or state government security, bank can perform issuing letters of credit and bank guarantee, etc. So all these are the various form of businesses that can be performed by the bank, and all these are defined under section 6. So because the section 5b only talks about you can accept deposit for the purpose of lending or investment, or you can give the repayable services, but apart from that, the different types of services are provided by bank. Hana, and that is defined under the section 6. You can only auto renew, Dipti ma'am, if the customer says so. Let's say, for example, I have had the FD for 5 years and my maturity of FD is there. So first condition is there, you can renew my FD if I have already said that to you. I have filled that in your form that I want to renew this FD after 5 years maturity, then you can do this. Second condition, if the customer, you are not able to contact with the customer, in that situation, if the customer has given you the authority, you can do the renew of the policy. Otherwise, by your wish, you cannot do that. The consent of customer is required to renew the policy. Okay, that you have to fill in the form by the customer. Now, besides, bank nowadays also undertake the certain activities, like for example, what kind of activity? Wealth management services, the project appraiser, the sale of third-party products as such as mutual fund, life insurance, general insurance, executive trustee services, acceptance of central and state government taxes, franking of stamp duty on the document, securities trading, the factoring, the venture capital financing, and the demat services. All these services are provided by bank. Hana, all these services are it is provided by the bank to the customer, and that's how the relationship between the bank and customer are of various types. Hana, and because the banks provide different types of services, various form of services, that's the reason why we call a different relationship between a banker and a customer. Now, who is a customer? Before we understand the banker-customer relationship, it is necessary to understand who you can call a customer. Acha, a person who visits a bank branch. A person who visits the bank branch, can you call this person your customer? Like, I am the individual person, I come to your branch, I am visiting your bank, can you call me your customer? Yes or no? Just answer in yes or no. I come to your branch and to visit the branch, and I am your customer? Obviously not. So when I will be known as customer, when I will be taking a certain service from the bank. So the term customer of a bank is not defined by law. Ordinarily, a person who has an account in a bank is considered as a customer of a bank. To be known as a customer of a bank, I have to have an account, then I will be known as a customer of a bank. So the legal judgment in the past, however, used to qualify this statement by laying emphasis on the period for which an account had actually been maintained with the bank. Okay, so when I will be known as a customer, when I have a bank account in a bank, then I will be known as a customer. That's a very basic definition of a customer. Now, for the purpose of KYC requirement, a customer is defined in a certain way. Hana. Now, first, before understanding how the customer is defined for the purpose of KYC, first let me know what does KYC means. What is KYC? and why the KYC is a very important process for the banks and financial institutions. Let me know. What is KYC and why it is a very important process for the banks and financial institution? KYC is know your customer. That's correct. Hana, what is KYC? KYC is a know your customer. That's correct. What about rest? Why the KYC is important? Mukesh sir, timing of PPB class is at 7:30 a.m. to 9 a.m. to verify the identity of a person. Okay. What about rest? Document to identify individual. Okay, correct. What about rest? To know the person, to avoid fraud and crime. Okay. To verify. Okay. Address and ID proof of a customer. To avoid fraud, identification proof person. Okay. So KYC is simply a process. Know your customer is simply a process in which we are saying that have to be performed by each and every bank and financial institution. So what is KYC? KYC is a process that have to be compiled by each bank and financial institution to know their customer. As the name suggests, know your customer. To know their customer, they have to perform this service or they have to perform this process that is known as know your customer. Now, this know your customer helps you to know about your customer actually, the identity of the customer. Okay, so that whenever if a customer in the future defaults, you will be able to know where and how to find your customer and who is actually your customer is. So that's what the know your customer you have. And the know your customer introduced very good. It was introduced to prevent the money laundering. Now, what is money laundering? The conversion of black money into white money. So what people used to do, they have to have a multiple bank accounts to convert their black money into white money. And that used to happen. People used to do the default with the bank also. Let's say, for example, I have opened an account in Punjab National Bank. I have taken a loan from the Punjab National Bank and I'm not returning it back. Okay. So in that situation, I am a defaulter for the Punjab National Bank. PNB will not give me further loan until and unless I will pay the old one. So I went to the State Bank of India. I opened an account in SBI. I asked for a loan from the SBI and I have taken the loan from the SBI. Now I have again done the default with the SBI. It used to happen when there was no internet facility. It's very obvious there is no internet, so it's not possible for each and every bank to let the other banks know about the default that I have done. It's not like PNB will go to each and every bank and tell them that this is a customer, this is a defaulter, do not open the account of this customer. It's obviously not possible. So it used to happen, and that's where the RBI introduced the Know Your Customer services to control the money laundering and to control the frauds in the banking system. Now, if you have a 1 bank account or a 10 bank account, doesn't matter. Your account can easily be inspected, or the due diligence can be done by the bank at any point of the time, because all the banks are linked with your KYC documents. Acha, what are the KYC documents? Let me know. What are the KYC documents? I'm not talking about official valid document. Official valid document is a different thing. I'm asking about, for the KYC purpose, what is required. For the KYC process, what is required? Very good. The identity proof and address proof with the photograph. This is KYC document. Identity proof, address proof, and the photograph of your, that's the KYC document. That is what required to perform the KYC process. Now, what is officially valid document? Officially valid document which helps you to provide the identity proof and to provide the address proof. And PAN card is not a official valid document. Okay, some people have written here PAN card. PAN card is not an officially valid document. There are total 6 official valid documents, but PAN card is not a part of that. Okay, and if someone asks you all that what is KYC documents, what is required for the KYC process, you will say identity proof, address proof, and photograph is required. And for identity and address proof, what documents will be valid? That is known as official valid documents. Okay. So let's continue. So for KYC purpose, the requirement, the customer is defined as a person or entity that maintains an account or has a business relationship with the bank or conducts a transaction with the bank. So that person who have a bank account or have a business relationship bank or conducts a transaction with the bank, that person will be known as the customer of a bank. So one on whose behalf the account is maintained or transaction is conducted, that will be known as the beneficial owner. Like on my behalf, any other person is maintaining my account or is performing my transaction, then that person is the mediator. I will be the beneficial owner. So it was introduced for the Prevention of Money Laundering Act, in which the Prevention of Money Laundering Act 2002 Section 2FA, it talks about the beneficial owner. The beneficial owner means the individual who ultimately owns or controls a client of a reporting entity or the person on whose behalf a transaction is being conducted, and includes a person who exercises ultimate effective control over a judicial person. So beneficial owner means simply that individual person who ultimately owns or controls a client. Of what? Of your reporting entity. So it's very obvious, on behalf of me, a certain other person is performing the banking transaction or controlling or managing my account. That person will be my client and I will be a beneficial owner here, because actually I own the money which is in the account. So this is defined under the banking, under the customer category or the definition of the customer. So beneficiaries of transaction conducted by professional intermediaries such as stockbrokers, chartered accountants, solicitors, etc. are permitted under the law. So beneficiaries of transaction can be conducted by any professional mediator. Like for stockbrokers can be there, chartered accountants can be there, solicitors can be there. They all are permitted to become a mediator or beneficiaries of the transaction, who conducts the transaction on behalf of the beneficial owner. Next. So any person or entity connected with the financial transaction which can pose significant reputation or other risk of the bank, say a wire transfer or issue of a high value demand draft as a single transaction. So what we're talking about here, simply any person or any entity which conduct a financial transaction, which can pose a significant reputational or other risk. To whom? To the bank. It's very obvious now. If any customer you have, that customer can create a certain kind of risk to your bank. Or in case of a wire transfer or issue of high value demand draft as a single transaction, these can create a certain kind of risk in the bank. A lot of type of risk is there in the bank, like the credit risk, market risk, reputational risk, operational risk, business risk. A lot of types of risk are there in a bank, that can be seen in the bank. So apart from that, under the Prevention of Money Laundering Act 2002, it has defined the definition of a client. So client means a person who is engaged in a financial transaction or activity with a reporting entity. Reporting entity means the banks and financial institution. They have to report to the RBI. They are also known as regulated entities, and includes a person on whose behalf the person who is engaged in the transaction or activity is acting. So the account is mine, but it is maintained by some other person. So the other person is a client and I am a beneficial owner, right? Now, a customer of a bank need not necessarily be a natural person. Obviously, a firm, a joint stock company, a society, or a separate legal entity like a partnership firm or an association of person, they can also be known as a customer. So it's not always mandatory that individual person like me or you should be the customer of a bank. No, it can be any of these entity also. Okay, so explanation of section 45Z of the Banking Regulation Act clarifies that the customer includes a government department and the corporation incorporated by or under any law. Okay, so that's what we're talking about. So explanation to Section 45Z we have talked about of a Banking Regulation Act. It clarifies that the customer includes a government department and a corporation which is incorporated by or under a certain law. Okay, will be covered here. So this is what the definition of the customer we have seen, and we have seen what is actually the bank and a banking company or a banker, and when these terms can be used, at what condition these can be used. Okay, all that we have discussed. Now we are starting with the banker-customer relationship, and this is the first relation between a bank and a customer. And that relationship is known as debtor-creditor relationship, in which bank is a debtor and the customer is a creditor. Creditor means customer is giving money. So it means when a customer deposits a certain amount of money in a bank, the customer becomes a creditor and the bank becomes the debtor. Okay, there are two types of relation, creditor and debtor, debtor and creditor. If I'm talking about debtor and creditor relationship, here, debtor and creditor relationship, when the bank is debtor and the customer is a creditor. Achha, I will write it like this. Creditor, debtor relationship and debtor creditor relationship. Okay, let's discuss this. So in one case, the creditor will be a customer. And in the other case, the creditor will be a bank. Okay, now here, the debtor will be bank. Here, the debtor will be customer. Clear? Now, this situation happens when a customer deposits money with the bank. When a customer deposits money with the bank, the customer will become debtor and the bank will become debtor. Sorry, customer will become creditor and the bank will become debtor. Okay, in the other condition, the customer is debtor and bank is a creditor. In this situation, when bank gives loan to the customer, so the bank will be a creditor and the customer will be a debtor. Let me know these two conditions are clear. The first one and the second one. Let me know they both are clear to all of you. That in which condition bank will be a creditor and in which condition customer will be a creditor. So if I am depositing a money in the bank, I am giving money to the bank now, so I will be a creditor. And if I am taking a loan from the bank, so bank is providing me money, the bank will be a creditor. So these are the two different relationships between a bank and customer on the basis who is giving money to whom. Okay, so when a customer deposits money with his bank, the customer becomes a lender and the bank becomes a borrower. So bank's borrowing money and the customer lend money to the bank. So the money handed over to the bank is a debt. The relationship between the banker and the customer is that of a debtor and a creditor. So the main feature of this relationship are, first, the bank is free to use that money. One second. First, the bank is free to use that money in a way most beneficial to it. So whatever money I have deposited in a bank, the bank has a right to use that money by its own will. When and where the bank seems to find out that this is the best way to invest the money or this is the best way to use the money of the customer, because it will give the maximum benefit to the bank. Accordingly, bank will do what? Bank will invest that money because bank is free to do that. The customer should make a demand of payment. Okay, the banker is not required to pay voluntarily. The second condition is if you want the money you have deposited in a bank, you have to ask for it. It's not like the bank will come to your home and asking and telling you, let's say Rakhi is coming, let's have a 50,000 for the Rakhi. We have withdrawal from your account. That cannot be done. If you want the money, you have to demand money from the bank. Okay, third is saying the demand should be made in a specified manner. It means in written, writing by check, draft, withdrawal form, order, or otherwise during a working hours. It's not like you can go to the Sunday on a bank and the bank is closed and you are claiming that I wanted my withdrawal and the bank is closed. No, in a working hours with a proper specified manner by using a check or draft or withdrawal form, etc., or from the ATM, you can withdraw your money. Okay, so these are the features of this particular relationship between bank and customer. And the creditor is a customer, does not have any security from the debtor. Hana, like I have deposited my money in the bank, I do not have any security. It means I do not get any collateral. Like I have given the money to the bank, I am not getting any collateral. But if I am taking loan from the bank, I have to give the collateral. Hana, that's what it is saying. The creditor, it means the customer does not have any security from the bank. Now, the law of limitation does not begin to run until a demand has been made for repayment in case of both demand and fixed deposit. So what you're talking about, the law of limitations, it will not start until the customer asks for the withdrawal. A customer asks for the repayment. And now, in both the cases, in the demand deposit and as well as in the fixed deposit, or you can call it a term deposit. So these were the features of your relationship between a bank and customer. That's a debtor-creditor relationship. The debtor was bank and the creditor was customer because customer has deposited the money in a bank. Now the creditor and debtor relationship. Now here the bank is a creditor. It means bank has given loan to the customer and the customer is a debtor. So when the bank lends money to the customer is borrower and the bank is a lender. So the borrower will be a debtor and the lender will be a creditor. So lending money is the most important activity of a bank, because you are accepting money for the purpose of lending or investment only. Next, when the bank lends money to the customer is the borrower. Okay, that we have seen. The resources mobilized by banks are utilized for lending operations. Customer who borrows money from the bank owes money to the bank. In case of any loan or advance account, the banker is the creditor and the customer is the debtor, or the borrower. Customer is the borrower. So the borrower execute documents and offer security to the bank before utilizing the credit facility. So if I want to take a loan from the bank, I have to give the security. I have to give the, what can I say? I have to give bank the collateral, the security. Then the bank will give me the money. And then I will be able to use that that loan that I have taken from the bank. So in addition to these two activities, bank also undertake the other activities that is mentioned in the under section 6 we have already discussed. So in section 5b, it has said that bank perform the business of banking, accepting deposit for the purpose of lending or investment and the repayment of the loan. And the repayment of the deposit. But apart from that, the various other forms of businesses are performed by the bank that is defined under the section 6 of your Banking Regulation Act. Okay. So upon depending upon the types of services rendered, the nature of transaction, the banker acts as a belly, acts as a trustee, acts as a principal and agent and lessor and custodian, etc. All these are the relationship between a bank and customer. And these relationship will be defined on the type of service you are taking from the bank. So the primary function between a bank and customer is a creditor-debtor and debtor-creditor relationship, because the person will become your customer at the time of opening a bank account. So the first primary relationship between a banker and customer is a debtor and creditor relationship, in which bank is a debtor and the customer is a creditor. Okay. Apart from that, all the other relations are defined on the basis of the various form of banking services that banks provide to the customers. Okay, and that we are going to discuss from the next class. So let me know in today's session if you have any doubt. Let me know here. Let me know, is there any doubt in today's session? Okay, no doubts. So we will be starting after this the relationship between a banker and customer, like a bank as a trustee, Bella relationship. Hana. Apart from that, we can say agent principal relationship, lessor lessee relationship, indemnified relationship. All these relationship are based on the different services that bank provide to the customer. How I am the person who have a surplus money, do not compare this on the level of the assets of the person, asset of a company. I am not comparing myself with the assets of a company, like the whatever asset company have, I have more than that. No, it's a financial system in which one person becomes lender and another person becomes borrower. So when Adda 24/7 needs money to expand their business, I have invested in that company. I purchased the share of a company of 1,000 rupee, let's say. So I lended the 1,000 rupee to the company. That's why I am the person who have a surplus money. If Adda 24/7 is taking a loan from the bank and I have deposited 5 lakh rupees in my bank account, that money is used by bank to give loan to the Adda 24/7. So I will be the person who have a surplus of money. Clear, Sonali ma'am? So the person who is giving you money, that's the person who has surplus money. Here to the company, I am giving the money. Here in the company, to the company, you guys are giving money because you are purchasing the share or bonds or debentures or government securities or any other form of the way by which the companies raise money. That's why we are the person who have surplus money. Okay. Make the class from 7 to 8:30. Ravi sir, the timing not possible because I am busy in the another batch from 6 to 7:30 a.m. That's why your class timing is 7:30 to 9. Okay, so let's end the session here. We will be meeting again in the next class, and till then, do make sure you revise the concept. And those who are watching us on YouTube, if you want to enroll in the particular batch, you can see on the screen the Sankalp JAIIB selection batch. It started from today, that's the 4th of August. And to enroll, you can use the code JC80, that will give you the 81% discount. Apart from this, in the evening, we also have a class of your Indian economy, Indian financial system. So you can go and enroll in that particular batch also. You can check the demo session at the 7 p.m. only on Officer 24/7. Like right now, the demo is going on. So if you want to take the demo of IEIFS, you can come at the 7 p.m. Okay. So let's end the session here. Thank you everyone for joining the session and take care. See you all tomorrow.